JJ the CPA here. Hope you're doing well. So, is it time to file for PPP forgiveness? So, I put out a video here about a week ago and indicated for the self-employed that don't have any employees, I would say green light to that, most notably because we now have the simplified application for forgiveness of $150,000 or below. That's really what we were waiting for. Now, for those of you that have employees, which could include the self-employed, Schedule C, Schedule F filer, of course, C Corps, S Corps, partnerships, it could be time. Let me say it that way. It could be time. I would probably say right now, February 5th, might be just a little early, but we are so close. Why are we going to continue to wait? Well, we now have direction related to the employee retention tax credit mixed in with the PPP forgiveness. Now, I will say this, if you don't qualify for employee retention tax credit, which I would encourage you to look at that hard, because I think way more businesses qualify for this than they realize. And I'm going to plug it. I'm going to put a link in here. I've got a seminar that I did that's a deep dive into the employee retention tax credit. And you get immediate access to the seminar that I did with about 300 people. It's a 2.5-hour seminar with a PDF PowerPoint with 3 hours of Q&A and another 1-hour video that does a deep dive into who qualifies, plus a ton of links, calculations, examples, flow charts. But anyway, so check that out. It's $97. As Dax, the CPA, would say, the materials were worth the cost of admission, which I appreciate. But if you aren't going to take advantage of the employee retention tax credit, as in you don't qualify for it for 2020, I say you're ready to go. You should be ready to go to file for PPP forgiveness. Now, for those of you that are filing for the employee retention credit, have filed for it for 2020, here's why you want to wait just a little bit longer. And I'm going to put a link in the body of this video to scratch that. It's a video that's going to come out about 12 hours after this. So once that video comes out, then I'll put a link to it in the body of this video, all to say this. The SBA and the IRS have now documented in black and white really the simple process of getting the employee retention tax credit and then achieving the forgiveness for PPP. And they don't spell it out as here's the steps, but when you read both, you put them together, which I spell out for you in this other video, but I'll just tell it to you now. IRS says that you can take advantage of the employee retention tax credit, even if those wages also qualify for PPP forgiveness. You just simply do not use any wages that were used or will be used for PPP forgiveness for wages you're going to use for the employee retention tax credit. So it's just those wages can either be used for PPP forgiveness or ERT. Now, when you go to the SBA and you look at the instructions on the PPP forgiveness applications, Form 3508S, it's on page 4. On the Form 3508EZ, I believe it's on page 6. And then on the Form 3508, it's on page 10. But they all say the same thing, which is just simply list your payroll costs and do not include the payroll that was then used for the employee retention tax credit. So for those that haven't filed for PPP forgiveness, then when you do go to apply for PPP forgiveness, then you do not include the wages that you used for the ERTC, but one needs to happen before the other. See, when you file for PPP forgiveness, the way the law works is that any wages during that 24-week covered period is deemed for PPP forgiveness purposes, meaning it's just automatically considered wages for PPP forgiveness purposes. You don't really have a choice. What you do, though, is when you file for PPP forgiveness, any wages that you use to get the employee retention tax credit or the sick leave credit or the paid family leave credit or even the work opportunity tax credit or any other credit that those payroll costs would have been used for, then you simply subtract those wages from your PPP forgiveness payroll costs as it indicates in the application. So you do first filing for the employee retention tax credit, and then you file for forgiveness. But to make it rock solid, to avoid a misstep, right? Remember, PPP forgiveness applications, regardless of what the banks are trying to strong arm you over some, the PPP forgiveness application is not due for 10 months following the covered period. So we can be stressed about it and sweating it and be stressed. Don't really see any sense in that. And no, I'm not saying we're now going to wait until the 10 months is up, but we're going to wait just a little longer, because when you file for the employee retention tax credit, here's how you declare those wages to be used for those purposes. You report the wages on Form 941. So you may have filed Form 7002, which is the way that you could get the credit before you filed for the quarter on your Form 941. But even if you put it on Form 7200, you still, no matter what, regardless of what your payroll company may have told you, you have to reflect the wages on Form 941. Why? Well, because on Form 941, that's where you do the calculation of the credit. That's where you declare the wages. So on Form 941, you list, here are the wages that qualify for the employee retention tax credit. So that act is what you've done to elect those wages out of PPP forgiveness purposes. The reason to wait is that you could put together your Form 941, you may already have, and you submit it to the IRS. But what's prudent is just to wait, take a deep breath, wait. How long? Depends, but I would probably say, 30 days. Why? Well, you want to make sure that, think of when you bake something, right? I mean, if you take it right out of the oven, what are you supposed to do most of the time? You let it sit, right? You let it minorly cool off. So we want to do the same exact thing with this, because that's the most obvious way to ensure that you have declared those wages for employee retention tax credits. And guess what else? I'm on the fence on this, and you can see I've got another video. I'll go ahead and put a link into the body of this video about the employee retention tax credit, and do owners and spouses qualify? Well, right now I'm on the fence. I did not include on purpose my clients, the owners and their spouses, those that had that, wages in the employee retention tax credit calculation. We went ahead and submitted and put in the wages for the employee retention tax credit on the employees for those that qualified, etc. But I'd like to wait a little bit longer to see if the IRS is going to come out with some revenue ruling or a revenue procedure or something that we can actually rely on. Side note, if you look anywhere on the IRS website on any given page, especially with FAQs, it indicates that you cannot rely on the FAQs, and you cannot use the information that they provided that is not in an internal revenue bulletin, and you can't use it to argue it in a court of law. Well, as it relates to that issue, all we have is one FAQ to go on and one little paragraph from the CARES Act that deep dives into those that are disqualified from being included in the employee retention tax credit related to ownership and family. So I'll let you watch the video on that. But I'd like to wait a little longer to make sure that we can't include those. I don't think we can. But as it relates to that, once we put in for PPP forgiveness, we no longer have an opportunity to use those wages for the employee retention tax credit. So why would I want to rush and do that? Especially with my clients, you have to remember, all I can do is provide information and advice that is consistent with what I'm telling my clients. But my clients, every single one of them, are going to get 100% PPP forgiveness. So I want to make sure they have every opportunity then, before that is done, that any and all wages can be used for any of these tax credits. Now, the other thing, though, is that let's say you go the route and you go, you know what, I'm going to include the owners, or I don't care because we're never going to include the owners, or whatever the case is. Let's just say for grins, you go, you know what, I'm good with my employee retention tax credit. I would then, you've just submitted your Form 941, let it sit, right? Let that pan of lasagna sit for a second. Let the pan of brownies sit for a second. 30 days might be a reasonable amount of time. Really at this point, being a certified public accountant in the trenches of tax season, we're going to wait till after April 15th. So we got a good 70 days until that's done before we're putting in for PPP forgiveness application. So that'll be plenty of time to just ensure that there isn't any hiccup backwards. Remember, this stuff's complicated. This stuff's detailed. And when you file a Form 941, it fits into a much larger picture for payroll. 941, okay, is a quarterly form. There's now 4 of them, obviously, right? So those 4 quarters need to fit together and then match up with a Form 940 and match up with your Form W3, which is a summary of all your W-2s. Not to mention those, in essence, get tied into whatever you file with your state, whether it's for withholdings and or state unemployment taxes. It's like a mobile, right? Think of a child's mobile, a baby's mobile, right? They lift their hand and pull on one. Well, everything gets affected by it. So you don't want to snafu something. But typically, if there's going to be an obvious snafu, and sometimes it could just be unintentional, you're probably going to know that fairly quickly because the IRS is piecing these things together. Now, it does take about a year, which we're not going to wait that long, for the Social Security Administration with the W-3s to interact with the IRS. But nonetheless, these things are intricate. And they're, in my mind, a little bit delicate. So for my clients, we've put in for the employee retention tax credit. We're going to need to get on tax season. We've got priorities of getting tax returns done. Then we're going to file for PPP forgiveness. Anything that needed to have come out in the wash will have come out by April 15th. And we will know by April 15th if there is any further glimpse or concrete information from the IRS on whether or not owners or spouses would qualify. And so that'll really be my timing. I was emailing with Tony D, and I had said, well, hey, are you in a rush to file? And of course, he sent back an email. I knew he was chuckling when he wrote it based on how he stated, well, what do you mean I got plenty of time? I've got all the way till August. So we have time. But, these benefits that are being provided, we don't need to be scared of them. We don't need to be stressed out about them. We need to ensure that we're doing it all properly, sure-footedly, and really taking advantage of it properly to the extent of what it is meant for. I know many of us, I'm one of them, but many of us small business owners, right? We've got so much on our plate. It's like, oh, I want to check that one off. Oh, I want to check that one off. And especially now, banks are pressuring for people to put in their PPP forgiveness applications. You want to know why? And it's not because there's nothing wrong with what I'm getting ready to tell you. But the banks don't get paid their fee on what they lent out for PPP, their 5% fee, until a forgiveness application is put in and the SBA makes a determination. And the bank doesn't get their money back from the SBA on any forgiveness amounts until there is an application put in and forgiven by the SBA. So you can't blame the banks, right? The banks didn't know that people would have this long to file for PPP forgiveness, because when it first came out in April, it was 8 weeks to spend it, and you had 6 months, in essence, from the date of distribution to file for forgiveness. So the banks were looking at this as a very short-term proposition. And now banks are involved with lending out in the second round, whether it's first draw or second draw. And they're 1% loans, and they're 1% loans on simple interest, not compounded. So we can't really blame the banks. However, we can't conform to a bank's needs and desires and put that in front of your much needed, much deserved, intended help for you. Because basically, once you put in for PPP forgiveness, well, you've already taken all your ingredients. You've already put it into the pan. You've already put it in the oven. You pretty well can't pull it out, and now just pull out the salt or the baking soda, right? It's just already in there. So the unfortunate thing right now is I don't see any glimpse, but I do feel that they will correct this, but there's no glimpse for those that already filed for PPP forgiveness to be able to now use the wages during the covered period for the employee retention tax credit, which is, pardon my French, it sucks. And the problem there is that those that were just, I want to mark it off the list. My bank is wanting it. Why wouldn't I just put in for forgiveness? And if you've been watching my channel for a while, you know that I've said, you can, but I'm waiting. I'm having all of my clients wait. I'm not letting my clients put in for PPP forgiveness. So Tom is another one that we email back and forth, and he and I were emailing recently that there's a lot of pressure going on right now related to the banks wanting people to put in for PPP forgiveness. So if you're self-employed and you got no employees, well, you don't qualify for the employee retention tax credit. You got the simplified form. Boom, go ahead and get her done. CSR, hopefully he's already done it. And then if you either aren't taking advantage of the employee retention credit, no, you cannot take advantage of the employee retention tax credit, and or you filed for the employee retention tax credit, you filed for it in early January, you then after that, got your Form 941 in, and you kind of feel like maybe as you get into February or March and you're not in a tax season, you're not in a deadline, you want to go ahead and file for it. That's why I said, I think we're there. So for me and my clients, we're there. Now it's just simply, we put in everything. So we're locked in that we have elected wages for the employee retention tax credit. I just want to make sure that we don't need to then also put some wages in for owners and spouses. Because again, if we put it in for PPP forgiveness, well, there's no way to pull that wage back out later. But even if I wasn't waiting on the owner and spouse determination from the IRS, more information than FAQ number 59 that the IRS has put together related to that, and it's code section 51I1, which then references to another code section. I believe it's 152D. But you can see my other video related to that. But I still would be having my clients just wait a little bit, make sure we don't have a hiccup that comes out of what got filed. Because you have to remember this. There's not a lot of precedence. I was talking with Chris, who's a CPA, today, and we were talking about this. There's just no precedence for any of this stuff. And so when there's no precedence and we're somehow, we're trying to blaze our own trail here, patience is a virtue in this. And so when we have time, we have time. But I really feel like I can't imagine we'd be waiting much past April 15th after we take a little breather to go ahead and then file for forgiveness. We wouldn't be waiting on any more stimulus. We wouldn't be waiting on the simplified form, which were the two things that we really were waiting on. And we'll know by then if the owners and spouses are going to be able to be included. And I'll tell you this, if the IRS doesn't come out specifically within about 90 days from now to indicate, well, where I stand now, I wouldn't be including the owners and the spouses. So you can check out my video on that, which really comes down to owners and spouses don't seem to be specifically excluded, but they're definitely not specifically included. And when you look at the sick leave and the family paid leave tax credits, owners and spouses and the self-employed are specifically included. The self-employed are specifically excluded from the employee retention tax credit. Partners specifically excluded from the employee retention tax credit. So was it an oversight? I think so. And I'll let you watch that video, but really at the end of the day, owners and spouses would be able to determine their pay, over 50% owners, and it's never a logical conclusion that the IRS would allow, in my opinion, based on 28 years of experience, an opportunity for someone an owner and a spouse, to create payroll for themselves to then take advantage of a tax credit. All right, hey, here's the great news. We're there within 90 days. We're there. So if you're doing what I'm doing, I would mark your calendar for May 1. There's really only one other thing we're waiting on is the owners and the spouses, and for April 15th to get passed and maybe taking a breather. All right, hey, if you made it to here and you're not a subscriber, do me a favor and do that, okay? Subscribe, okay? Log into YouTube, right? Got your Gmail, your email, log in, create an account, subscribe, turn on your notifications. Most of my subscribers, I ask to do the same, and pretty decent percentage do. But I appreciate you tuning in. Thanks for all the support. We're over 57,000 subscribers, over 4 million views. So thanks to all of you, and looking forward to also getting back on some lives. And Amanda and I maybe doing a happy hour or two. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. All right, hey, have a great one.